section 4. In today's class is all about basics. I'll start from the scratch. So just I would like to know about what is business entity concept or entity concept.
It defines the concept, which means that the owner is different from the business.
Very good, excellent. Owner is different from the business. Excellent. So I would like to tell you in detail about this. Let's say one story. I have like $1,000 with me. Okay, and this $1,000 I have kept in my front pocket in my shirt. So now what I did, out of this $1,000, I have transferred $400 to my back pocket trouser. So now I would like to ask you one question. Now how much money I have?
The same amount, 1,000.
Same amount, $1,000. If I would have asked what is the money, rest of the money in my front pocket, then it is $600. But that is not my question. My question is what is the money I have? Even though there is a transfer of money, but again we have only $1,000. So why? Reason is what? What is that reason? Even there is a transaction transfer, right? But still the total money is $1,000. Reason is what? Very simple
Because it
question.
The
is
transfer
not
is
been
within the same
spended on
body.
others or any
Correct.
other expenses. We are using
Correct.
for it ourselves.
Correct. So first thing is what? Both the pockets are belongs to me. There is never ever a transaction, right? Now what is the point? Owner and business. A layman thinks business and owner both are same, but exactly it is not. If both are same, if owner is investing in the money, sorry, in the business, so it is not at all a transaction. But accountancy law says, this is generally accepted accounting principle, that there should be a transaction between owner and business. But as per the layman, both are same. But as per the generally accepted accounting principle, as a finance accounting and finance profession, we should know that owner, though it is established by owner and business, not one and the same. They are two different personalities. Reason is what? Reason because if owner is investing something in the business, it is a transaction from the generally accepted accounting point of view. But if both are same, just now I have told you, both pockets are belongs to. So that in that situation, it is not a transaction because both are belongs to the same person. Owner and business is same, even though there is an investment. And if he is using something for his personal use also, there is no transaction. We cannot. So that's why business entity concept or entity concept says that owner and business, not one and the same. Though it was established by owner, that business. Though business is no like a human being, it doesn't walk talk like that. But on behalf of business, owner does. So the first thing is that it is possible we can record the transaction between these two people. We can record the transaction. The second thing is that if both are different, we will maintain owner's account, and also we will have all the transactions we will consider from business point of view, not owner's point of view. Say for example, if business is selling, it is not owner selling, it is business selling. If owner is withdrawing something, so business is the first person. That mind shift should be there. For analyzing the business transaction, you separate the owner. You separate the owner. And business is the first person and owner is the second person. Any other person interacting, that is the third person. That's why when owner is interacting with the business, that's where we will use the capital or equity. We will use the uh, drawings for personal use, especially if we talk about sole trading and partnership. But whereas any other person might be it is employee, might be a supplier, might be a customer. So we never record for them as a capital or equity or something like that. We will be using a different wordings. Name of the person will be used. If you is customer, so then it is first name of the customer and then receivables. This credit sale. If anybody is giving loan to the business, and the loan, SBH loan, HDFC bank loan, or a supplier is giving, so then supplier name and then this accounts payable. But we never use for third person equity or profitability. So finally, what we concluded that owner and business not one and the same. This is the first thing. Second thing is what? The second thing, why this rule? Because we can record the transaction. We can record the transaction between these two entities. Third thing, all the transactions are considered from business of. So owner and business are not one and the same. We can record the transaction between two entities. The third thing, all the transactions are considered from business point of view. And fourth point is business is the first person, owner is the second person, any other person is a third person. When owner is interacting with the business, normally we use equity. If owner is giving to the business increase in equity, if owner is receiving something, that is a decrease in equity, either equity or from the retained earnings. So the profits are called the retained earnings. We will be discussing those points. Any other person is interacting, we will use the name in the first instance and then we'll segregate as per. If it's a customer, then there is a credit transaction will be recorded as account receivable, supplier, then accounts payable, and any other person involved in this transaction is that you can say a bank is giving loan to the business. So in that situation, we cannot write accounts receivable, accounts payable, but it is due to the bank. So we will record as a loan, HDFC loan, Raju loan, or whatever it may be. So we will be considering the names. That is the important thing that we need to consider. These are the 4 points that we need to derive from the business entity concept. This is what the important thing. If you have any doubts, you can discuss with me. Otherwise, I will move on to the next topic. Now, let's say business. XYZ business, let's say it's a company now. So now, here the shareholders invested in the business. Together, I'm calling, not individual. Invested. Shareholders invested. Let's say, okay, $1 million they have invested in the business. At the same time, company decided they will go with a debt from bank loan, we can say. Let's talk about the HDFC Bank. HDFC loan took from the HDFC Bank. It $500,000. So now you tell me, without discussing the debit credit rules. So now we will construct the balance sheet. That's what my major focus is there. So now business point of view, business is getting from shareholder $1 million in the form of cash and bank. So always we'll treat both cash and bank. That's why cash and cash equivalents. Marketable securities also come into this. So that will be another discussion. Second thing, we are also receiving $500,000. The total cash and bank balance $1,500,000. Now my question to you all is that shareholder and bank both are giving to the business this cash and cash equivalent. Now, after giving this cash to the business, either bank or shareholder, they have any right on those amounts? They represents right, but as of now, who is the real owner of this? Yeah, $1,500,000. We can have interactive session, please.
XYZ company.
XYZ company. Once shareholder invested in the form of, that's what I have told, whenever a owner is involved, we will be calling equity, or in USA it is called as common stock. Equity share capital is called as common stock. So that we will be discussing later on. So this is one. So now the $1 million, when shareholder given to the XYZ company, shareholder XYZ company issued the share certificate to them. So now this $1,000, who is the current owner of this 1,000, and they have right. They represents right, but they already handed over with a condition that you can use for doing the business. So now the real owner, current real owner is the XYZ company. Even bank cannot off back that money once it is given a loan for 5 years or 10 years or whatever. And they don't have any right except the equity shareholder. Bank don't have any right how you are using. Purpose is told, and in that purpose, how you are using, today you are using, tomorrow you are using, that is a different thing. But they don't ask any questions. So business point of view, now this cash and cash balance is asset or liability? Because all of you coming from the commerce background, there is no need to explain asset, but I will explain asset. So now the company owns this $1,500,000. Am I right? Company
Yes, sir.
owns this $1,500,000, right? Now, who is the real owner of this particular cash
Yes.
and cash balance? That's the business. So now business owns $1,500,000. So asset, in general term, asset is either cash or anything that is useful to run particular business, and it derive benefit, economic benefit in future too. Useful more than a year. That is very important. So that is considered, what company owns is considered as asset. Again, we have segregation in that asset. One is non-current asset and the current asset. So which is not a current asset, that is a non-current asset. Current asset is the asset, either it is a cash or anything that can be converted in the form of cash within the 1 year or business cycle. Business cycle for some few organization, it might be differ less, more, or whatever it can be. So in the definition, I'm not going technical point of view, just general idea I'm giving. Even a non-commerce background student listening to this particular class, they will easily can understand. What owns is asset, and assets are categorized as current asset and non-current asset. Anything, cash or anything that can be converted, transformed into the form of cash within the next 12 months or business cycle. Anything else which is more than 1 year is considered non-current assets, which includes building, furniture, all this. Current assets includes what? Cash, accounts receivable, inventory. These three things are I'm discussing as of now. So cash, anyhow, it is a cash. Accounts receivable get converted in cash because you will be giving 30 months credit, 60 days credit, or 90 days credit. Then inventory takes a little time, longer time. Inventory get converted into accounts receivable get converted into cash and cash balance, equivalents. So now the point is what this business owns few things in that cash and cash equivalents, $1,500,000. And this comes under current asset. No, the point is what? Okay, business owns 1,500,000, but at the same time, is it the property of business or it is represented by some people? Tell me. The 1,500,000 is the own property earned by business or given by some people?
Given by shareholders and bank.
Yes, given by shareholders. That means equal $1,500,000 owes organization owes, right? It owes. That means when the business closed down, so whatever it may be, the amount after paying to the creditors or the loan holders, residual value will be given to the shareholder back. So the real owner, once the business is closed, or if they do not want to continue business, they transfer the share by selling their share, they will get their money back as per the market value. That's why 1 million, as of now, $1,500,000 company also owes to shareholder and owes to the bank because we need to pay back that $500 after 5 years or 10 years in installments, whatever we pay. So that means this is nothing but owes. Owes two types. One is to owner, another is to any other person, third party. So this owner is represented with equity, and this third party is known as liability. So that means owns his asset that categorized as non-current asset and current asset. And this owes, that means we owes back to few people, they broadly categorized as equity, liability, and equity. Liability again, non-current liability and current liability. Current liability is a liability which will be payable back within a year or in the business cycle. Non-current liability, which is not a current liability, that is non-current liability. That means we need to pay after some time. That means after 12 months, everything that comes under category non-current liability. Just like the HDFC Bank is not current liability, it is a non-current liability. So therefore, now the company has 1 million as non-current liability and equity portion we have, sorry, $500,000 as non-current liability HDFC Bank and $1 million as an equity. Hence, now the equation is what? The equation is asset is equal to equity plus liability. Now, at presently, assets or we have non-current asset segregation, current asset equal to equity plus this is non-current liability and the current liability. Now, what non-current asset do we have? No, as of now, no. Current asset do we have? Yes. How much? $1,500,000. How much equity I have? 1 million. How much non-current liability I have? 0. What is the current liability? Sorry, non-current liability we have $500,000. Current liability is nothing. So this is what the fundamental. I have not discussed the debit and credit. Even I will not discuss until the end of today's session. But we analyze the transaction and also we are constructing the balance sheet. I have already constructed the balance sheet. Now let's say I will continue this discussion. So what happened? Out of cash balance that we have here, this is the cash balance, cash and bank balance. Out of 1,500,000, what I did, I have purchased some machinery that is useful for 10 years, machine. The $500,000 are utilized. And I have purchased around $600,000 inventory. Now tell me, what is the cash balance I have?
400.
400,000. 400,000 is, that is segregated here as the cash and cash balance of current asset, cash and bank. Is there any change in the equity? They represent their claim, right? $1 million. And is there any change in the HDFC bank loan? No, we have not paid at all. Right? So they represent the same. There is no current liability here, zero. This, what is the transaction here? Here the transaction, two transactions happen. One is what? Owner invested 1 million and took the HDFC loan $500. These are the transactions we have covered it in this way, and we constructed the balance sheet. And that balance sheet I have transferred in the form of equation. Now I'm continuing. So this is clear. This is the third transaction that I did, that I have purchased some non-current assets, that is machine and furniture, blah, blah, $500,000. And I have purchased current asset, that is inventory. You can say it's $600,000. You may ask, sir, when inventory purchased, we cannot write that thing in the balance sheet. We are following perpetual inventory system. Perpetual inventory system, we will be discussing those things. We will not recognize as expenditure. So that will be recognized once the that inventory converted in sales. At that moment, the relevant portion will be treated as cost of goods sold. But as of now, sir, why can't we show the inventory as expenditure? No, it will be shown as the inventory because we are following perpetual inventory system. So in perpetual inventory system, when that particular value of goods sold, at that moment only we recognize from that particular inventory as cost of goods sold. Will not recognize that thing. Is that clear, all of you? Am I clear to everyone?
Yeah, it's clear.
Oh.
Yes, sir.
Oh. So now the point is what I did out of this 600 inventory, 50% of inventory, 50% of inventory, that is $300,000. I have added some processing cost by using machinery, all those things. Labor I have included, overhead cost I have included. So that comes together $100,000. So total $400,000 inventory is converted into finished goods. Inventory converted into finished goods. So what is the transaction that is going to be happen now? What is the transaction? Machinery, because it is never end. This is not the close of business year ending. So depreciation will be done later on. Okay. Machinery, same, represents $500,000. There is no change. Out of 600,000, how much inventory I took? 300,000 inventory. So what is the inventory balance now? 300,000. Remaining inventory is converted as finished goods, which we took 300 from inventory plus 100 from cash. Paid the labor charges or whatever, other manufacturing costs, $100,000. So we have $400,000 finished goods. And what is the cash balance we have? Out of 400, 100 used here. So 300 is my balance inventory from this. And this 400 cash and cash balance I have used for finished goods. What is the balance available here? 300, right? Balance available 300, right? Am I clear to everyone? Is this clear to everyone?
Yes.
Yeah. So now same 600 same 400, total is 1 million, right? Same 600, same this thing, total is what? How much? 1 million. This total cash is in the form of inventory before this transaction here, and 400 cash and cash balance and 500 machinery. Now, after this transaction, 500 machinery, 300 inventory, finished goods 400, and remaining is what? 300 as a cash and cash balance. See, 3 plus 4, how much? 7, 8, 9, 10, 1 million. Okay. No change. Is there any change in equity? No. $1 million. Is there any change in HDFC bank loan? No. $500,000. So now what I did after this transaction, this finished goods, okay, 400,000 finished goods, out of which I have sold 300,000 finished goods for 1 million. 300,000 finished goods sold for 1 million. 300,000 finished goods sold for 1 million. Now, at this moment, revenue is there, expenditure is there. So, revenue and expenditure we will not consider in this accounting equation. It will be done separately. This is income and this is the expenditure. 300,000 finished out of 400,000 finished goods, 300,000 finished goods sold for 1 million. Now, from this finished goods, I am recognizing COGS, cost of goods sold, is $300,000. Now, my sale is income is 1 million. 1 million. Now, tell me what is my gross profit. Normally, a 10th class students also do. Sales minus cost of goods sold. What is my gross profit? $700,000. This is my gross profit. Right? Now, how to record this particular transaction? Is there any change in machinery? My non-current asset that represent with machinery assets or whatever it may be, furniture and all, I have same 500. There is no change, right? So now in the current asset, now tell me how much inventory balance I have as it is 300 inventory, right? I have 300 inventory as it is. Now out of 400,000 finished goods, how much finished goods I have now?
100,000.
100. 300 because already converted into the cost of goods sold, right? So therefore, now I have finished goods only 100,000 finished goods, right? So next is what? Cash and balance. Now tell me, what is the cash that I have in my hand now? Old 300,000 and entire goods sold, 300 goods sold for 1 million cash. So how much cash balance at the end I have after this transaction? How much machinery I have? 500, right? Is this clear to all of you? Machinery 500, there is no change. Inventory is how much? How much inventory I have? Previously inventory 6. In that 300 is 50% we have used. And here 400 is the cash and balance. 100 we have used. So here inventory 300, right? Finished goods are 300 plus this 400, right? And remaining cash balance is 300. So what happened? Finished goods transfer to the COGS, correct? 300 finished goods transfer to the COGS. And sales are 1 million and the gross profit is 700. Now tell me, I have inventory is how much? 300. I have finished goods balance how much? 100. What is my cash and cash equivalent balance? What is my cash and cash equivalent balance? How much cash balance I have previously?
300.
300,000. Now this cash and cash balance is how much? 1 million or 1,300,000? 1,300,000, no? Are you getting my point, all of you? Are you on the same page? Are you on the same page with me?
Yes.
Inventory 300. Finished goods out of 400 we have used 300, so I have only 100. Already cash and bank balance I have 300. Now I have sold for 1 million. So I have 1 million plus this 300, 1,300,000. So 1,300,000, 1,400,000, 1,700,000, right? Already cash and cash equivalent we have 1,300,000, 1,600,000, 700, and total कितना हुआ बोलिए 2,200,000, right? Total assets represent. Is this clear to everyone? All of you?
Yeah, clear.
Clear. But how much we have here? Equity. How much equity is there before this transaction? Equity is 1 million and HDFC bank loan is non-current
500.
liability is 500. Now where that 700 increase? कैसा हुआ ये 700 increase?
Retained earning.
Yes, this is the gross profit. Though it is earned by business, but finally who is the backbone for all these things? That is the owner, shareholders, and entire thing goes to in the shareholders' pocket. Now, in the equity, this called as shareholders fund, which includes equity 1 million as it is what they invested, and by using all these things they have generated profit that is nothing but retained earnings, that is 700,000. Now 1,700,000 plus 5, 2,200,000. This is what exactly creation of balance sheet and analyzing the transaction. Did I use debit credit? My debit credit use किया क्या?
नहीं.
No.
No. Did I construct the balance sheet? No. अभी balance sheet construct करेंगे? No. This is the balance sheet, traditional balance sheet बता रहा हूँ आपको. Equity and liability and here asset. Now tell me what are the assets I have? Non-current asset, how much I have? What is the non-current asset I have? 500,000.
500,000.
In the current assets, what are the things that I have? Inventory is how much I have?
600.
300,000.
300.
Inventory 300. Finished goods, how much I have? 100,000. 100,000, right? And then what is the cash and cash equivalents finally I have? Cash and bank, 1,300,000. Total current assets, how much? 1,700,000. 1,700,000, right? So total balance sheet, total assets, how much? 2,200,000. What is the shareholders fund that I have now? Equity is how much? 1 million. Now profit, that what we have earned, I have not included the other expenses. If other expenses are there, again there is a decrease in cash here. Other expenses are there. So this 700 is a gross profit. Other expenses, indirect expenses, let's say 200. So there is a decrease in cash here, right? So profit also decrease in the same way. So, but I'm not focusing on at the moment. To keep it simple. So now my retained earnings called profit, that is 700, and
Yeah.
my non-current liability I have HDFC bank loan, and that is 500. The total 2,200,000. This we have constructed the balance sheet, and this is the analysis. So when you become a certified management accountant, every transaction how it is hitting the balance sheet, that's where you take a decision. The certified management accountant. एक ट्रांजैक्शन मेरा कैसा हिट कर रहा मेरे बैलेंस शीट को, how the non-current assets are changing, how the current assets are changing, how the equity is changing, how the non-current liability is changing, what is the status of current liability, this single transaction affecting my balance sheet how, वो है financial statement analysis. This is way I have never discussed the debit credit rules. It is a complex thing. तो नीचे के जो लोग रहते वो कॉम्प्लेक्स में उलझे हुए रहते, वो लोगों को बिग पिक्चर मालूम नहीं रहता. When you become a certified management, you will have a big picture. That's why the manager, finance manager, or the CFO इतना जो है ना दूर सोचते हो लोग कि अगर ये ट्रांजैक्शन हम कर रहे हैं तो हमारी बैलेंस शीट कैसी रहेंगी और उसका इफेक्ट शेयर होल्डर पे कितना है. What is the effect on the shareholder? How exactly? This is where our first class. This is the basics that I would like. Tomorrow, I mean to say, I will be announcing, might be on Saturday, our next class. So in that session, we will be discussing the technicalities. What is debit? What is credit? all these things. But I do not want to discuss in the second session those things. Those are boring things. Still, we will go for a bigger picture. So we will do some transactions, how it affects, and ratios. I'll be focusing on liquidity ratio. I'll introduce liquidity ratio, and same transaction analysis will be doing. And that's all for today. Thank you so much. And I hope you enjoyed the session.
Alhamdulillah, it was good, sir.
Okay.
Easily understandable.
Yeah, it was a good one, and it's actually I was expecting the same subject to be learned, analyzing of the financial statements.
Okay.
So in the first class, it was the main concept. So I feel
Yes.
it good and interested to learn more,
Okay.
inshallah.
Thank you. Jazakallah. So how
Yes,
did you
sir.
feel?
It was good. Alhamdulillah, it was nice. Good, sir.
Thank you so much.
It's interesting and
Okay. Thank you so much. So these basics
Okay.
class will go on for a couple of days. Then ratio analysis I'll begin next class itself, but basics once again. So once foundation and basic is set right, then it is easy to go in deep. Okay. Thank you so much.